For the first time in CoreLogic's 4-decade survey of Australian house prices, it is now more expensive to buy in Adelaide than it is in Melbourne. But the latest figures show price growth is slowing nationally, with some good news for renters too. To break it all down, we're joined by CoreLogic's Head of Research, Eliza Owen in Sydney. Eliza, good morning to you.
Good morning, Michael. Thanks for having me.
No, that's right. You're always welcome. Now, we're going to bring up on the screen shortly a list of all the capital city price movements, but more generally, house prices have grown for the 19th consecutive month. In the face of a weakening economy, inflation, all sorts of challenges, what is keeping the housing market buoyant, or relatively buoyant in your view?
Sure. So we've seen 19 consecutive months of growth, as you say, but the pace of growth is declining. And I think that is a reflection of some of the weaker economic conditions weighing on demand. So for the past 19 months, you could argue that the mismatch of supply and demand, so not enough homes for the amount of people that want them, have kept prices rising. But what we've seen in the past 3 months is that the balance of buyers and new listings in the market has become more and more balanced. On a quarterly basis, home values were up 1.3% nationally through winter, but that's less than half the growth rate we saw in winter last year of 2.7%. So yes, we've defied a lot of things like high inflation and cost of living, weaker economic conditions and low consumer sentiment, but it's clear that there is a gradual slowdown in that trend.
Yeah, okay, let's look now at the breakdown between the states and territories and that key breakout news. Melbourne, here we see the graph on the screen, slipping below Adelaide in terms of cost of buying a house.
Yeah, so an important distinction here, this is the median dwelling value by capital city. And Melbourne's dwelling market is weighed down by the fact it's got a lot of cheap units. About 30% of Melbourne's housing stock is units, as opposed to about 16% in Adelaide and Perth, which also overtook Melbourne this month, the first time since February 2015. But at the end of the day, it is a reflection of the fact that Adelaide and Perth continue to see strong growth rates, while Melbourne is in its 6th consecutive month of decline, and values across Melbourne are 5% below their peak, which was in early 2022.
Right, and what's the outlook as far as you can see for Melbourne, given that, as you say, abundance of at least units coming onto the market?
So there's a lot of factors putting downward pressure on the market. Increased investor levies for property has dissuaded a lot of the investor demand, but also things like weak internal migration trends, a lot of supply, which has helped to absorb demand. I don't think we're going to see those dynamics change in the short term unless we get some sort of serious boost to buyer confidence, and that would probably be in the form of interest rate reductions, successive reductions in the cash rate, or Melbourne values falling to the point where people want to buy them again. At the end of the day, this isn't all bad news. This is the Melbourne market becoming more affordable for buyers.
And Adelaide, any particular reason why that is doing well, certainly compared to cities like Melbourne?
Yeah, so it's kind of the flip side of what we've seen with Melbourne. Since the pandemic, South Australia and WA more broadly have seen more positive internal migration trends. They also had very weak property price performance through the 2010s. So I think these cities are also playing a bit of catch up. Okay,
and finally, let's look at the rental market. What has the survey found about that?
Yeah, so some good news for renters potentially. We've seen 2 consecutive months now where nationally rent values have not increased, they've just been flat. 2 months of decline in rents in the Sydney market. On an annual basis, the rent growth is still sitting at 7.2% nationally, which is high. Remember, in the 2010s, your average annual rent growth was only 2% a year. But it's the lowest annual growth rate we've seen since mid-2021. So clearly moving past this peak of net overseas migration, more share houses reforming, and in some states a little bit more investor activity is helping to reduce some of the pressure on the rental market.